Hey everybody, Economic Ninja here. I hope you're doing great. I got an awesome story about real estate crashing. And I'm not joking, I've got to smile about it because I want you guys to be ready. We are seeing everything from institutions to private individuals stopping the purchasing of new homes. We are seeing home sales literally falling off a cliff. Now that hasn't exactly translated into lower prices, at least the low prices you're expecting, like what we saw in 2008 when my home in California dropped 40% from peak to trough. It was a multi-year move, but it is happening, and it is happening this time so much faster, so much stronger than what we experienced back in 2006 to 2008, all right? So here we go. Oh, but really quick before I forget, everybody that bought the the real estate crash course, I've just uploaded the first video. You guys took advantage of the 80% off. If anybody else wants to get in by the time we are done filming and all the videos up, the discount link is gone. As a matter of fact, we only have a certain amount of people or a certain amount of slots. So if it still says, what is it, $200, which is 80% off, you're in, okay? So guys, here we go. This is out of Fortune magazine. Institutional home buyer YieldStreet slashes buying levels by 90% as it awaits a sharper home price correction. Now guys, we've already heard stories out of Zillow and other iBuyers, internet buyers of real estate, how they were caught up in this home buying frenzy only to find themselves taking massive write-downs when they would buy houses. Like in Arizona, I just heard of one, they paid $850,000 for it. It is now listed for $710,000. They are hemorrhaging money and they are slashing their purchases right now. This is only going to add, and this is part of the course, to the downturn in real estate prices, because now you don't have all of these buyers, these institutional buyers that were causing this market to run up. Well, what happens on the flip side? Think about what they're saying. They're awaiting a sharper home price correction. This is why I want you guys ready for the action that is about to play out. But the problem is, if you don't have your finances together, you don't have your budget set up, you don't know how to interview the right people or get the right people on your team, you're not going to know how to take advantage of this because you're not going to be thinking with a clear head. And that's where I want you guys at. I want every one of my subscribers owning their own home plus a rental or two. And the reason why is because I want you not only to build cash flow, but generational wealth. Check this out. We're going to go through the story. The ongoing housing market downturn has seen everyone from a mom and pop landlords to Blackstone-owned Home Partners of America pull back on plans to acquire more homes. It makes sense on the way up. The pandemic housing boom, which saw rents and home prices soar, was amazing for everyone, from Airbnb hosts to home flippers to institutional buyers on Wall Street. However, last year's historic mortgage rate shock, and just so you guys know, it is not done yet. The Federal Reserve is making sure that you know they are not done raising rates. It's only going to exacerbate this problem. Has seen the national market flip from inflation mode to deflation mode. The fear of further price declines underpinned many investors' decision to remain on the sidelines. Now think about this. It says right here, from December onward, the expectation from my side is we'll have another 10 to 15% decline in home prices nationally. And this is from Tejas Joshi, Director of Single Family Residential at YieldStreet. Okay, YieldStreet is a massive company. And I gotta be honest with you, I think 10 to 15% is a joke. I actually believe that by the end of 2023, you're gonna see home prices take off at least 15%, if not more, nationally. I'm not joking, it sounds crazy, but hey guys, I'm not a financial advisor. Shoot, I'm a real estate agent, but the worst one at that. I'm a real estate investor. So I think differently than real estate realtors, different than mortgage brokers, because I'm not in it for the commission, I'm in it for the long haul. The money you make on a deal, the right deal, is made when you purchase the property, not when you sell it, because when you purchase it is when you get the value. And that's the most important thing, is to extract as much value from a deal as possible. And there's ways to do it, and I'm going to explain that in the course. Now I'm going to go over a couple charts. We're going to put some charts up here. First one we're going to go over is the US home prices that are falling for the first time since 2012. If you look at this chart and look at first focus on the time frame from 2006, 2005 to 2012, just red all the way down. That is what's really important, because look at how it started. In 2005, you see a little bit of red come down and then a few months, quarters of up volume, right, in actual home prices. But then the cascading hit, and that cascade is when the masses figured it out and the sellers panicked and started dropping their prices, slashing their prices, trying to sell their house faster than the neighbors, trying to get out of the market. I was actually a part of that. I was flipping homes during that time. It was a crazy time. Now, if you look at the first wave of what's going on this chart in 2022, the end of 2022, look at the size and scope of the home prices being dropped right now, how they're falling, in comparison to what happened prior to the Great Recession. To say that this is going to be worse, just look at that chart, is an understatement, because one thing we didn't have back then was massive inflation. Okay, so get ready for that. Now it says right here, through November, the Case-Shiller Home Price Index has U.S. home prices down 2.4% from June 2022 peak. However, Joshi says, the lagged Case-Shiller reading is underreporting the actual decline. Let me stop right there and also remind you that not only Case-Shiller was wrong during the 2008 crash or before it, preceding it, but all of the big credit reporting agencies, like all of the analysts from S&P, Fitch, and all of them, they did not start downgrading the home builders and all of the mortgage companies until after, when it was too late. You want to be ahead of the game, and that's where I want you to be. I want your head in the game, but I also want you ahead of the game. I want you ahead of the masses. Now look at this other chart right here. This is a closer look at the hypothetical drops in US home prices. If you'll notice here, just right now you go, look, Ninja, this thing's almost straight up. And look, it's just peaked just a little bit right here at 298.68. But I want you to understand something. That peak is what's called the break in confidence. It's the break in confidence of the US consumer and the US home buyer. And I don't care how big the fund is. I don't care if you're BlackRock, Blackstone, or Black Bunnies. I don't care what you're named. I don't care how big you are, how much money you have. The facts are you are watching the retail buyer. And if the retail buyer is spooked, you're spooked. And what's funny is that is usually a lagging indicator. It usually takes institutional investors longer to figure out how quick the consumer got spooked, like what happened last June. That was a dynamic shift from people panicking into the home market to, whoa, wait a minute. If we wait a little bit, we're going to save some money. Maybe those institutional investors should have been watching the Economic Ninja. Guys, in closing, check this out. I want you to know this. There's nothing scary about waiting. There's nothing scary about holding back. It's hard sometimes when you see everybody making gains, but I can guarantee you this. In the next 90 days, you are going to witness absolute carnage in the home sales market. And when Q1 numbers come out in, a couple of months after the Q1's done, and we start to see the abysmal sales and the sheer amount of people that didn't go and refi their mortgages, and we start seeing banks coming out with crazy, crazy loan products because they need to make loans to make money, you're going to be grateful that you were ready. I want you prepared and not scared. I want you to own more real estate than you've ever owned in your life. Even if you couldn't dream about owning your own home, you're about to go do it. Guys, I'm going to put a link to the discount code. Once they're done, they're done. I don't remember how many discount codes we have left. And sorry, you just go to that button. If it says it's $200, you know you got the discount. All right, guys, we're filming the course. Thank you so much. Everything's crushing it. There is one lesson on there. The Economic Ninja is out.